Hey, this is Brian, and I'm going to give you a quick tutorial on the Radix Economic Model Visualizer that we built and show you what all these different control panels mean and how to use them. So, what is Radix trying to do? They are trying to solve a fundamental conflict with a lot of cryptocurrencies, and that's the conflict between investor needs and business needs. Investors want to have a coin that is going to go up in price, and businesses want to have a coin that is going to be very stable in price so that they know they can pay their bills next month. And so what Radix has done is put together an economic system that slowly builds up reserves and uses those to back coins and keeps the coin price very stable over time. But for investors, it will create new coins and drop them into investors' wallets so that investors are earning good returns over time. So, of course, this is all done algorithmically, and they have a lot of math behind how this whole system works. And so that's the purpose of this visualizer, so you can input various scenarios and see how the various prices and supply and all of those economic factors will react. And so just to be clear, this is not a tool to predict what is going to happen. It's a tool to predict what would happen if you input various scenarios. Let's get started. The first thing you're going to do is hit the Run Simulation button right here, and that's going to give us a chart over here in this tab. This is the investment chart. And every time we change any of these sliders or anything over in the control panels here on the left, you have to hit that Run Simulation button again to see the effects of those changes. This is showing us right here that if you are simulating 260 weeks, that's 5 years. The blue line here is the break-even point. You invested $1,000. You can see that right here, fiat invested. And under the default settings, after 5 years, you would have a minimum value of $21,800, and that is the backed by fiat. So the system will automatically buy back all your coins at that price, hypothetically, and are projected. If the coin is trading at the projected $1 per coin after 5 years, you would have $47,000. Okay. So before we get into these control panels, I'm going to walk you through each of these tabs over here. These are showing the results of the simulation. All right, so this is a chart showing investor balance. This is a chart showing a more detailed view of all of the things that are relevant to investors. So for each week up through 260 weeks, it shows your XRD balance, and so this has a projected value of $1 each. Your account is going up over time. Each week you're going to receive some more new XRD tokens if the demand continues to be strong. So you can see here on week 1 you have 1,000 tokens, then you gain 380 tokens, and now your balance is 1,380 tokens, and so it keeps on growing over time. P-min is the minimum buyback price. So this is the price at which every coin in circulation is backed. And so you can see that in week 2, there's only enough reserves in the system to buy back every coin at a price of 8.9 cents per coin. But then as more fiat reserves come into the system, the reserves are able to buy back the coins at a price of 13 cents, 20 cents, 25 cents, and that keeps going up. And it's headed up towards $1, and at which point it would stabilize. The minimum XRI value, so that means if you sold all of the coins in your balance, see week 10, if you had 4,000 coins and you sold them for 24 cents each, then the value is going to be $990, which would give you a ROI of -1%. But if they're trading at $1 per coin, then you would have an ROI of 308%. And so you can see that as you go down, this is minimum ROI, this is projected ROI. It's quite unusual to have a coin that has a minimum buyback price that keeps on increasing. You're not going to find that in any other type of economic system. Here's another tab called the Economy Table, and this is giving you a whole bunch more detailed information about the simulated scenario here. This is week reserve balance, so this is the number of dollars that they're holding in reserves, new reserves incoming each week, XRD supply, this is the amount of tokens in existence. W is the weight they are using to divide up the reserves between backing new coins and creating new coins. That doesn't kick in until later on in the economic go live. It starts out in a bootstrapping phase where you can't sell anything. So this is zeroed out for the first 24 weeks. P-min, again, we explained that. That's the minimum buyback price. This is the number of tokens bought by new investors, tokens sold. And then expansion XRD, this is the number of tokens that are used to increase the supply and then dropped into investor wallets. The percentage that tokens in existence have grown, the percentage that reserves have grown, and are we in bootstrapping or not? Here's week 25 when it first says false. Okay. So now we're going to the P-min chart. This chart shows how the minimum buyback price changes over time, and it's going to keep going on up until it gets close to $1, in which it'll level off. This is new reserves. This is fiat reserves, XRI's fiat reserves, entering the system each week. With these default settings, it's not very realistic, but we can change that in a minute. Total reserves is going up linearly because it's the same amount of new incoming reserves happening every week. And again, the XRD supply, this is token, the total token supply is going up almost linearly. And then here's the market cap chart, and you can see in the first 24 weeks, nobody can sell anything because they're building up reserves during bootstrapping, and then that's when you actually get a market cap. And then we have a help section here that can basically tell you all the things I'm telling you right now. So let's go back over to the controls. Okay, so weeks to simulate. You can go from 13 weeks to 520 weeks. That's 10 years. You can simulate a different amount of fiat if you want to do an investment simulation. And in this case, the investor is buying at week 1 and they're selling at week 260. And you can change those, of course. But there's this drop-down menu here, and it gives you completely new control panels. Okay, so let's look at this one, XRD Market Demand Modeling. So what this is doing is it's saying, yeah, this is not very realistic to have $10 million flowing into reserves every week. Let's make it more realistic. Well, one thing you can do is you can give it some volatility, and you can give it a little volatility or a lot of volatility, and you can keep punching this button until it looks like something that is more realistic. And then another thing you can do here is come down to these 3 controls: strong, weak growth, week of max growth, and gradual sudden growth. So these are all describing an S curve, and so that's a pattern that you often see with new technology adoption. So strong, weak growth, this is telling you how high is your S curve going to be for new incoming reserves. When is the middle of the S going to be there? So let's put it on week 26, just for fun. And then is it going to be a steep or a shallow S curve? Let's make it kind of shallow. And let's go over here and we'll look at total reserves, and we'll hit run simulation. Oh, that's a really shallow S curve, isn't it? Oh, we need to turn down weekly minimum new reserves. We'll make that just 1 million. Okay, and now we'll really see the S curve. Okay, so that's a pretty shallow S curve, and let's make it steeper, and we'll see what it looks like now. Okay, and in this case it goes totally flat. Okay, and so what I'm doing is weekly minimum new reserves. This is adding a fixed amount to our simulation of incoming reserves every week. Again, probably not realistic, but you can make the demand curve look like whatever you want it to. So let's put this here, let's put this here, let's add a little volatility. Okay, and so new reserves. It's starting to look like something that's maybe a little more plausible. So you can play with that. And then the last item here is unrecoverable supply. it's not realistic to think that the reserves would ever go completely to zero, because people lose their passwords and so forth. So we set a 1% floor. You can change that. You can make that, you know, zero. It can never go lower than that. So let's look at the next drop down. This is simulate market crash. Here, let's reset all our controls first. We'll do run simulation. Okay, simulate market crash. Let's look at crash severity. If we set that to 30%, that means that the entire market cap is going to drop by 30% every week. And how long do we want it to last for? Let's make it 3 weeks. So it should drop by about 90%. And when is this crash going to happen? Let's make it happen like on week 59. Okay, so run simulation, total reserves chart, and then we can see the economy table. What happens? Let's go down to week 59, and we can see we were getting $10 million incoming each week. Then suddenly we're losing 160 million. But let's look over here. This column right here is P min. It's not going down. So that's part of the point of this model, is to do horrible things with supply and demand and then see what happens to the minimum buyback price. People are selling this thing like crazy. It didn't go down. And then when money starts coming back into it, in fact, the minimum buyback price is going up even faster. So let's go check the P-min chart to see what that looks like. P-min chart right here. Yeah, we can see that it was starting to level off, and then that huge crash, and then when money came back in, it started to go up again even faster. All right, that is simulate market crash. And then Radix Economic Policy. These are the settings that Radix used when they were testing different versions of the model, and those aren't really going to change, but you can play around with them if you want to. Bootstrapping is an early phase when they're trying to build up reserves. The algorithm changes before and after the bootstrapping phase. So that should give you an overview of what this model is doing, and I hope you have fun trying it out.